Hello, welcome to our session, UK Trade and Export Finance, is it for me? Trade finance, a lifeline for businesses to expand into international markets. But despite these opportunities, it is often not utilised. It can seem complex, confusing or overwhelming. In this session, we're aiming to simplify just that, so you can feel confident to embrace the international trade opportunities through trade finance. The Department of International Trade, UK Export Finance and Trade Finance Global have teamed up to discuss how to use our new UK Trade and Export Finance Guide effectively to support your business growth. Just to let our viewers know that besides our panel today, we also have our teams on hand online to help you with any questions that you may have, so please ask them via the chat throughout the session. And if you want to follow along with the guide, then you can download it for free through the link via the chat. So, without further ado, I'm delighted to introduce you to our awesome panel today, Mark Abrams, David Priestley and Keirra Smith. So, can you please give your quick elevator pitch, so to speak, your name, your role and what do you do?
I'll go first. So I'm Keirra Smith and I'm Deputy Director of Export Capability in the Department of International Trade. And amongst a range of other things, I run a program called the Export Academy, which is a primarily 98% digital online platform where we help introduce or help teach new exporters about what they might need to know about the exporting journey and give them that knowledge and training. So it's Export Academy does what it says on the tin, is what I like to say. It's the learning about exporting.
Thank you.
I'm Mark Abrams. I run the Trade or Receivables or Invoice Finance Desk at Trade Finance Global. I will spend my days speaking to banks, financial institutions, credit funds, alternative lenders on a daily basis, understanding exactly where they will finance through the supply chain. And on the other side, we'll be working with potential borrowers from SMEs to corporates looking for further trade, stock financing, all the way through to long-dated invoices.
And I'm David Priestley. I'm the Head of Export Finance Managers at UK Export Finance. And basically my responsibility is to manage the domestic business development for UK Export Finance. That means that I'm responsible to engage with our banking partners and clients across the country and our stakeholders around the country as well, to ensure that we're linking everything together that enables clients and businesses around the UK, SMEs and mid-sized businesses in particular, to get the trade finance that they require to get international trade to happen.
Thank you all. So David, before we get into specifics, like on a high level, what exactly is trade and export finance?
Well, I suppose in simple terms, these are the financial instruments that enable international trade to run smoothly. I really like the TFG guide because at the beginning of it, it highlights the trade cycle, and within that really shows really well the tensions that exist from a financial perspective. On the exporter side, you've got all the issues associated to lead time and managing the finances associated to getting a contract out of the door. And on the buyer side of the equation, you've got the fact that they'll be looking to spread the cost of their purchases, but also seeking assurance that what they're buying is actually going to be fit for purpose and exactly what they ordered. So you might say, well, that's pretty similar to domestic business as well. But the reality is that international business adds genuine complexity. When you think about law, jurisdiction, culture, language, currency, time, distance, borders and knowledge, I mean, these factors, when you look at them through a financial lens, could really prevent the deal from happening in the first place. So, I think trade and export finance really bridges these gaps and mitigates the final impact of risks on both sides of the equation. I like to think of it that trade and export finance really lubricates the gears of trade, supporting the exporter and the buyer. I suppose in practical terms, there are a myriad of products and services that fit into this space. But when I think about it in very high level terms, it really just boils down to buyer finance to be able to get the deal done. It's also about trade finance, enabling the exporter to achieve their working capital requirements, whether cash, contingent or transactional needs in that respect. And also insurance, basically making sure that the payment comes at the end of the day. So, going back to the original question, I suppose trade and export finance is the financial agency every step of the way. And without it, I think international trade would be certainly much more cumbersome and often less likely to happen.
Thank you very much for that, and I love the analogy. In terms of less likely to happen, I think, like, Keirra, what would you say are some of the main challenges that small businesses might run into when they're trying to actually access export finance?
Yeah, absolutely. Look, I think we should acknowledge that big businesses also have challenges as well, but I think for smaller businesses the issue becomes one of that they might not have a person dedicated to this, and they might not have the institutional knowledge or history that they can rely on it, or the ability to throw the amount of resources that are needed at it. So in my mind, some of the three areas that I find smaller businesses talking to me about and to us about in the Export Academy are around three areas around awareness, knowledge and confidence. When you're a smaller business, you might not be aware of who the players in the market are. Where do you go for this? Is this something you can even just Google? You won't know what is out there, and you won't have time to know what is out there if you're spending a lot of your time as a smaller business working in the business, not on the business. And you won't have aware of what's out there from the terms of the players who offer these kinds of services, but also what these services are and how they work. The next area is probably knowledge, and that's taking it from the awareness to the application part. Like, if you've not done this before and you haven't had time to focus on it, how do you know what product is right for you, what kind of impact that will have on your business, and how you apply that to your business? Like, how do you mitigate risks that will come up in trade finance? Like, what do you need to know about exchange rates and mitigating for cash flow risks and those types of things. So that knowledge and understanding is sometimes not there for smaller businesses. And last but finally, and I think it's something that we don't talk about enough, is confidence. So a number of smaller businesses just don't have the confidence because they don't have the awareness, or the knowledge is one thing, but they don't have the confidence that they know what's out there and how to apply it in a trade finance, but also generally in exporting. If they haven't done it, a lot of it, or this is their first time to exporting, say, they don't have the confidence along the whole process, the steps in the process. So that's why the guide is so important, and I think really valuable tool, because it lays it out, and it lays out where you begin with really simply and really easily understand in an easy understandable format, and why other services like the Export Academy, but other services that are offered across UKEF and other places, which help you get this knowledge and help build your confidence and raise your awareness, are really, really important.
Agreed. Thank you very much. Like 100%. When we were doing the research into the guide, like the biggest factor that kept on going time and time again was this ability of, I need to be confident to grow my business. Where do I start? And this was kind of all the way back to when we started it. So it was lovely to have that sort of a common thread throughout. Mark, can you then walk us through, please, some of the different providers of trade finance?
Yeah, of course. I mean, as David said, it's really important before you look at the providers to actually understand the trade cycle and where actually you're paying in the supply chain, and also from Keirra's perspective, really to understand at which level you're involved in that trade. So if historically it would be going to a bank will be a deposit-taking institution, and many businesses in the UK will use on a daily basis transactions through their own bank. But that might not always be the best place to go and access the trade finance product that business needs. And I think we're speaking a little bit later about actually at what point in the chain you're actually financing. So a bank will historically be the place that you go and you speak to your bank or your relationship manager and say, this is what I'm looking to finance, this is the chain, can you assist with allow this transaction to happen? Non-bank providers in the last few years have grown in their authority in the market, and this has also allowed many specialists in the market to sit in that supply chain and assist, whether it's letters of credit or invoice finance or just inventory and focusing on holding stock in the UK. And two other main points will be on the invoice side, so actually insurance in the market. So once actually a company has their good or potentially their service and they sell to another company, there will always be this dynamic between a buyer wanting extended payment terms and the supplier wanting payment straight away. And actually, if we extend credit out, usually we're looking at anything from 30 to 120 days on a normal business transactional cycle. That insurance allows a funder to come in and actually insure out the risk of non-payment. And the last point is export credit agencies like UKEF. So UKEF will step into the market when the insurance market and various other products will fail to allow those transactions to happen where there's already a financing line.
Thank you. And on to UKEF. David, can you then explain a bit more about the support that UKEF provides UK exporters, please?
Sure, absolutely.
I think, as Mark was just saying, we're here, UKEF is here to sort of ensure that no viable export fails for the want of finance or insurance from the private market. And that's a really important part that we have to play. And it's a really, valuable cycle to UK exporters around the country that they need to be aware of. But I think it's also important to sort of highlight that we complement, not compete with the private market. So if finance and insurance is available, we're not there to supplant that. We're there to provide it where those opportunities don't exist. So where a bank, say for example, or as Mark was saying, a non-bank finance institution has got limited appetite, we can put our guarantee in place, which mitigates the risk and enables the facility, the financial facility to be put in place. Or on an insurance side of things, we can put our own insurance in place, which we can do directly. So again, I thought that the Trade Finance Guide was really useful in explaining how we enable UK exporters to win business, fulfill orders, and get paid. So on the win business side of things, we provide buyer finance. Basically, this enables overseas buyers to access finance to buy British goods. I think the really important thing to say here is this is not just for large infrastructure projects and large corporates. This now is very much now focused more or as much towards SMEs and mid-sized businesses as well, whereby we can provide, our standard buyer loan guarantee or our bills and notes scheme for smaller deals to be done with the overseas market. And then, with fulfill orders, that's about supporting working capital needs for both cash and contingent liabilities. And we can provide an 80% guarantee to a financial institution for export working capital and bond support through our bank or finance partners. But now I want to emphasize that this focus now is very much more targeted towards our general export facility. This is where we're supporting more the exporter, less than the transaction. And the difference is that this is not linked to a direct export contract. The accessibility to this is actually quite low in real terms. You can be eligible if you have a 20% turnover, a 20% export turnover. 20% of your turnover is exports over any of the last 3 years, or 5% of your turnover is over all of the last 3 years. The advantages of the general export facility are the fact that it's very flexible. It's not tied, as I say, to a specific contract, but it can be used for almost anything. It can be used for domestic development as well as international development. The fact is that, if an exporter, under the eligibility criteria that are quoted, is building a new factory, developing a new product line, that's going to help their export opportunities in the future. So we see that as a benefit to the export market. And of course, also it's very much at the bank's discretion. How they use that. There's many different ways that the GEF can be wrapped around various different types of bank financing. The other thing that's attractive about the General Export Facility is its certainty. It can be put in place, significantly before you actually need it. So you don't have to, say, for example, if you're managing a contract that you're trying to get overseas, then there's a very tight timescale that you're working to. With a General Export Facility, this can be put in place months before you actually need it and drawn down in increments. You don't have to take it all at any one particular time. So again, this is extremely attractive to the market. And it's accessible. And that's really important as well, because it's been delegated to the banks and financial partners up to a £5 million value. And again, this aids the speed that the product can be applied. It gives the banks a lot more flexibility in terms of how they're able to apply it. And this is now completely our dominant product in the market. It's going to continue to develop and continue to expand over future years. And then, of course, we speak about getting paid. And where commercial credit insurance companies cannot provide insurance to for a particular deal, that could be because of the market, it could be because of the product, it could be because of various different things that the commercial market may not be able to provide in insurance. Then UKEF can provide credit insurance that covers individual single cover risk for particular markets. Our objective in this respect is to ensure that no export sort of fails in that respect. Insurance companies can go and do extremely well in sort of being able to go to the market and saying, yes, we'll cover all of your book, but we don't want to cover that country and we don't want to cover that deal. we want those deals to go ahead. So putting that insurance in place that sort of enables that to go ahead is also important. I also want to highlight the export development guarantee. We've spoken, that this is not just about supporting either the corporates or the SMEs, it's both sides. I've been talking about facilities here that generally speaking are in the SME and the mid-sized business market, but with the EDG, this is really the general export facilities bigger brother, and really covers the corporate market. And there are variants in this product for green and transition technologies as well, which is really, really important. And enables sort of larger corporations to invest and change the direction of their product requirements and develop their business in a way that really powers them up for next generation of exporting, which is really important too. Also want to highlight that we also have a supply chain discounting scheme as well that is again applicable to our corporate markets. And again, that's also highlighted in the TFG guide, which is important. So, that's really a snapshot. But two other points to highlight, I think, here. And that is that if there are any financial challenges, within companies that are interested in exporting, you should be talking to your export finance managers. They are experts in terms of both the products and services that we can offer, but also what else is available out there in the market. Mark mentioned about the private market, and that's really important. There are circumstances where banks will not provide insurance or provide their services. In that respect, UKEF can't support that element of business. But we can indicate where in the private market may be applicable for that business to go ahead. And a reasonable sized proportion of the companies that we support are through the private market. And I would say that alongside the TFG guide that we're talking about today and sort of introducing today, I think I would also recommend companies and businessmen to download the Leading with Finance brochure as well. That highlights in a little bit more detail, but not overly technical. How our products and services work and how you might be applicable for them. So this is the start, but the message is communication. If you have a challenge, if you have something you want to discuss more, come and talk to UKEF. We are very accessible, very open, and are always willing to talk to any companies that's got issues associated with their export finance.
Thank you for that, David. It was a very practical sense. And I think on that point then, Mark, at what point would a business actually want to seek out financing in the cycle?
So it's really, the first point is really to understand the cycle at which you're operating in, and to touch back on that dynamic that the supplier will always want to be paid earlier and the buyer will always want to push out payment terms as long as possible. And then understanding which sector and structures that you're operating within. So to take out the jargon and just use an example of someone who is a distributor for Apple selling to a retailer potentially in the UK. They would go to their supplier, it may be in Canada, it may be in Eastern Europe, and look at which point they're paying. Now, when we talk about pre-export finance and prepays and all the jargon that goes with that, all one needs to think about is anything before the goods are hitting the ship. So very much, if we're talking about apples in our example, it will be anything on potentially at farm or at farm gate or at inland silo or at port silo or in transit up to that point. So can payment be made prior to that point? That's where prepayment or pre-export financing will come in. Then the goods will go onto the ship, and at that stage, or on a rail car or in a plane or however they're traveling. But at that point, that voyage financing is something that then we talk about purchase order or trade finance when it's coming over. If those goods are coming into this example into the UK, they may go straight to the end customer, or they could sit in a warehouse or another storage location. And at that point, you may see inventory or stock financing. And the last point will be receivables, invoice, factoring, or many different words which basically mean the same thing or are a derivative of the same, which is just that pushing out of payment terms. So you're delivering your apples on day one. The larger customers will always try and push out payment terms as long as possible. And there you will have that invoice or receivable, which is deferred credit or just pushing out payment terms. It's usually 30 to 120 days. And the seller of those goods will want to get paid straight away. So that is what your trade cycle is. And it can be as long as 180 days plus. So it's just about filling and financing the gap of the trade cycle.
obviously there's a lot to take in here and a lot to digest. As you said, there's a lot of jargon within the industry. Can you actually break it down in terms of how would you finance along the cycle itself?
So as David said, it's all about understanding and seeing that cycle. So do not approach your finance provider and say, I want trade finance, here is the transaction. It's about being informed and having that education, and that is very much the guide or other ways of understanding at which point that you actually require that financing. So when we talk about pre-export financing, it can be what we would see as funded or unfunded. But we're looking at really how does the supplier get comfort to deliver the goods to the end customer. It may be someone that you've been dealing with for years, or it may be the first time. So actually, when we talk about sometimes unfunded or credit instruments, you might see letters of credit or standby letters of credit or bank guarantees, all again being very similar in that a financial institution is standing behind the company and saying, we are good to make payment as long as you hit these specific conditions. Obviously, again, looking at the supplier's negotiating position, they all want to be paid straight away very early, but we'd always push back and say, is there a way that a company can actually mitigate their risk of actually non-delivery of the product? When those goods go on the water and we see what we'll see sometimes is called cash against document payment or trade finance or purchase order led financing, that will be when payment is made, when the title is given, when I say title, the ownership is given of the underlying product to that trading or distribution company. When product comes over, sometimes it has to, various different models work in different ways, but if it's just in time or it's another structure, sometimes product or is actually aggregated in warehouses or a company needs to keep their stock. So they'll look to finance against that stock, and that's where you'll see inventory or stock financing. And just to finish off, when you actually sell, so title and ownership again passes to that end customer, that's when they're pushing out the credit terms and looking for the financing that may come in there to the seller of those goods would be discounting of those invoices, which would be, instead of waiting that 120 days to be paid, they want to be paid on day one or day two. So each leg of the actual cycle, a different financing facility will fit. And it's just important to understand how the cycle works and what you need before you approach a finance provider.
Thank you for that. So Keirra, obviously international trade is different to sort of domestic commerce. What are some of the key risks that you think sort of UK exporters should be aware of?
Yeah, I think it's important to acknowledge that there are more risks. We call it complexity, we call it risks when you're talking about dealing internationally. But the great news is, as probably David and Mark have kind of shown, is that there's a lot of trade financiers out there who spend a lot of time thinking about these risks and how to mitigate them. So there is actually a lot of support to be able to manage them. I'd probably once again categorize this into about 3 additional areas that people need to think about. That would be country risk, documentary risk, not sure if that's a word that I've just made up, and transport risk. On country risk, I think there's the things that people probably think that they know about already. You know, we talk about political risks, sovereign risk, exchange rate risks, and those types of things that people can probably plan for. But there's also things that people don't always think about, and that's like environmental or locality risks when you're exporting to certain markets, certain countries, or exporting through certain countries and certain markets. And that can be anything from conflicts, which are known or unknown, round to less or more opaque things like environmental factors, whether that is, seasonality because road and logistics close when different seasons, to bushfire risk and how that impacts not just how you get your goods to customers, but if customers still want them or if they still want that product at that exact same time, and those types of things. So that would be an area that I'd encourage businesses to think about. The documentary risk is all of the documents, processes and things that you need to sign and make sure, I shouldn't say sign, but you need to fill out and you need to get prepared in order to meet the requirements to be able to export. And these documents are often done in potentially different languages to the one that you speak all the time, in different time zones, and via a different legal framework or regulatory background, which makes them really more complex. So getting them right and thinking about those things is really important, because not having the correct documents in place can delay you're exporting significantly, and especially if you have time-sensitive exports, and I don't just mean like perishable goods, but if you've got to get paid because you've got to get that out and you haven't filled out the right paperwork to release that from a port, that can really hinder your operation and everything that you've put in place to make this sale. The last one is transport risk. I think it's about 80% of all freight when you're exporting goods goes by the sea, and about 20% by air. And so obviously there's things like weather, once again there's storms, there's even things like piracy and things that you need to consider, fire and those types of things, which aren't as apparent, so people need to just consider them. Then there's things that come up at other times, like we saw during COVID. There was an impact on passenger travel throughout the world, and of course that impacts air freight because the people who sit on the plane help pay for the freight that goes underneath the plane, and so it's a complicated market, and that's why you just need to have some management and thoughtfulness put into this. But I think, as Mark's displayed, there's a number of really highly skilled people who know how to help you with this, and I would encourage businesses to get out there and seek that help and able to and speak to people who are able to mitigate this, and to go to the support services that are available through UKEF and even at gov.uk and find out some of the answers there too.
For sure, thank you. And just last point, obviously trade digitalisation, it's been a bit of a buzzword, it's a hot topic within the industry. David, hopefully you can help us out on this. Like, how transformative are the impact of these decisions going to be for SMEs, or I suppose businesses of any size, moving forwards?
Well, I think we can all see that digitalisation is going to be the future, and only relatively recently, UKEF has established its own digital data and technology team to sort of manage these processes as we head forward. I think we can see, stepping back a little bit, HMG, the government has done a lot in digitalisation, really. And I think about over the past couple of years, the types of digitalisation that we've used, not just in trade finance or the likes, but in passport, probate, driver's licence, everything is going digital. And of course, there's much more to do, and trade and export finance is going to go online as well. But I think the point to say is that we are still in the early stages, but as digital services do develop, we're going to see much more end-to-end functionality, and that's going to really help the process.
Self-service digital journeys, starting with the exporter, can only increase the transparency that we're looking to deliver in this particular part of the market, and it's going to make everything much easier and more traceable. Like the process I've just described, the different processes you might use at home and what have you in terms of interacting. They're so much easier than the old system, and this is what digitalisation was going to bring to our market as well. So I think for SMEs and mid-sized businesses, getting comfortable with digital is going to be critical. Being aware that more of these applications are going to be client-led. So it's not a case necessarily of everybody doing these things for you. You're going to have to sort of understand how you engage with some of these platforms as well. But effectively, I think reducing the transactional burden, we'll see an increase to the accessibility of trade products generally, and will increase the scope of the number of customers that are able to access trade and export finance. So that's going to be a really positive thing. In UKEF, we are already on a journey that will embrace this technology in all that we do. Initially, we're progressing our EXIP product, our export insurance policy, through digitalisation. And already, our non-binding indicator, which is our premium tool, is already online. I would recommend people that are interested in sort of our credit insurance to go online and search for that and non-binding indicator tool, and just see, for the product or service or the product that you're looking to export, what the indicated cost could be on that. So this is a step in that direction. In due course, of course, the full application system and process will transition into a digital format. And that's only going to be the start, because I think, in due course, the majority of our products will end up with some form of digitalisation associated to them. There are clearly, a lot of benefits associated to this. Of course, it's all about the ease of doing business,
the speed that we can do business, the number of customers that we can touch in this sort of process as well, but also, streamlining businesses so that the actual financial process is improved, so people receive their funds quicker on both ends of the equation. documentation. Keirra mentioned, the documentation risk. Well, doing documentation online, like with those other systems, you can improve the transparency, you can improve the checking processes by building algorithms into that enable us to get the checks that are required done more efficiently and faster in that respect. And I think also one of the key things for businesses is they were going to have greater visibility of the process from their own point of view. They're going to be able to see the status of their contract step by step, and that's going to increase their confidence, increase their level of comfort with regard to where they are in the actual process. So I think all of this brought together is going to bring better interactions between all of the parties concerned. So in our case, in UKEF, working with the banks and our clients together in a tripartite arrangement is going to be a fantastic step, and it's going to be transformative for the whole business and the whole industry, in my opinion.
Fantastic. That's a very lovely way to end, very energetic. Thank you very much, and thank you all so much for everything today. I definitely learned a lot, so I hope it's been really helpful for our viewers too. And just to really re-emphasise, I think we've all said it throughout, but the support is not just here for this session, it's not just in the guide. We are here, our contact details are available at the back of the guide as well to support you. So any specific questions you've got, whether you're about to enter trading overseas for the first time or to new international markets, we are all here to support you with your journey with that. You're not alone, and we wish you the best of luck. Thank you for watching.